Ira Epstein of Lynn & Associates with your weekend edition of this financial market update. And this is for March 1st, Friday, 2019. And we're at the settlement prices. You're after 4 o'clock now, and you can see the rally we've had in the markets. Interesting how the market came up. You know, during the early morning, this market was fading because the economic that came out, the manufacturing data and the like, very frankly, is not looking good. Consumer confidence not looking good. What happened is the market started to rethink things. And the interesting part is you really never did kick back the interest rates. They keep climbing. I think you're back into the 275 area in the 10-year from the 263 zone. So this market's seeing higher interest rates climb, but the market seems to be taking on the attitude that world economies are such, the U.S. economy is not firing on every cylinder the way that it was last year, that it keeps the Fed in abeyance. And keeping the Fed in abeyance is a problem. In other words, a problem meaning they're not going to raise interest rates, even though they keep talking about the runoff of the balance sheet and they're going to have a game plan how it's done, which a lot of us took to be, is that money tightening? What are they doing? What do they mean they're going to run it off? So we need the explanation of that. The gold market paid some attention to everything. It got hit. You know, this is a market that was in the 1350 area. It's back under 1300. Silver gave up almost a full $1 an ounce. But the stock market, this is that relentless climb where bad news is good news and good news is good news. That's what you're dealing with. When we look at a monthly chart, we've now been able to stay over the 18-month moving average so far. Obviously, February, you can see. And if you go to January, you even closed over it. So we had a full month Feb. We don't know what March is going to do. It's the first day of March. But we know that support could be back at the 27.25 level in your 28.05 if it decides to pull back. The weekly chart is a slingshot. Just think of taking something, you let it go at 24.85, you're up to 28.05. I mean, there will be a point where there'll be a correction. We know that, unless you tell me you're going to go straight up to the all-time highs. That can happen too. The market's not paying that much attention to the valuations and how much the forward earnings are right now. The market's on a trajectory instead. And you can see how this trajectory has come up. Are we in a resistance area on the weekly chart? You betcha. You've been here before. This is October, November. So these are zones that the market had a problem with, and that's what you're dealing with right now. In terms of the weekly chart from the swing lines, of course it's in an uptrend. It had one minor week where it had a setback. It's just week after week it's been higher. Take a look at that. When we look at where the market might find support if it decides to pull back, well, on the weekly chart, it's around the 2672 area, combined with the 100-week average. You had one challenge of the 200-week moving average down here, and the market came back. This doesn't get enough TV people talking about it. They talk about the daily 200. When you challenge that 200-week, and that's a long-term average, that's what held the market in reality. In terms of resistance, well, you know, I'm already saying we're here. Let's assume the market wants to run. Right now, the upper Bollinger Band's 28.68. It's going to climb when we reopen on Sunday night, just the way that the math works with it. So it's going to be a little higher than that, in fact. When I look at momentum, to the upside. Remember, on the weekly charts, I do not look to see if they're overbought or oversold. I do that with the daily. This is either pointing up, pointing down, or going sideways. Momentum's up, bias is up, trend is up. On the NASDAQ, same thing. Higher, and away you're going. Now we're getting closer to the upper Bollinger Band, but still in an uptrend. Should the market decide to pull back, well, maybe you get back to that 100-week average of closes. Well, the 100-week's the green one. The 18-week is right here at 67.75. Resistance, if it keeps moving as it's been doing, 7290, 7300 zone. Dow, momentum up. Look at this market. Not even 1 week where we've had that setback. This is unusual action, and if you don't pay attention, you were here before, and these are zones that you had trouble with. So as much as I'm friendly, I'm certainly not a top picker. You're always better off coming in after the fact than picking a top or a bottom. You get sliced apart picking the bottom, and you get chewed up on the way up. Trend trading is what I like. And the trend right now with this rally, the last rally high we had was 26,088. You see it? We took it out now. So I could take this arrow and have it point up instead of down finally. So I'd have one arrow pointing up, one pointing down, because I don't have the pattern of higher lows, higher highs. I have a high and then a lower low. That's what we got. In the Russell, we came back alive. Look at how this one is. And on the daily chart, here's the interesting thing. This is the weakest of the group on the daily. Intraday today, it was losing what we call the embedded reading. The Dow was the one right behind it with the secondary weakness. But by mid-session, the market got its feet under it. And that's why intraday, you've got to always be careful. I look at those stochastics more on a closing basis than anything, and the momentum's still up. Notice all these charts at least had one break in them, not the Dow. When we come to the VIX, you're still in a bearish trend. The market is making a stab at trying to hold at the 100-week average. Momentum is still pointing down. The trend is down. People aren't buying insurance. That's what it tells me. Then we come over today to the 10-year note. And at the end of the day, while I've got the arrows pointing up, I now can change them. Why? If we take a look, we see this high was 122.13. This high was 122.19. We then come up and we look at what you did. This week you never took that out. It didn't take out the 13. I will be taking these two arrows, and sometimes I like to leave them out and teach you what I'm doing. Lower highs, lower lows. So you've stepped out of your uptrend. The support's back at 120.28 and momentum is turned down. So even though the swing line is down now, because the market's over the 18-week average, the bias is up, the two fight each other. You got a neutral chart. TLT, if you take a look, this week, last week you had gotten up here, this week you took that out. So now I have the higher high, lower low. I just wanted to leave these on one time to give you an idea as to how I work with them. Then we get to the dollar index, which has got a pattern of higher lows, higher highs, still in an uptrend. It wins by default, but it's really in a sideways pattern. It's been this way for a long time. A lot of people think that this is the year the dollar will go down in favor of other currencies, but to get that going, their economies better get doing something, or their central banks, because by default, we're still, even with the weaker data we're getting in, looking better than all of our trade partners. In the euro currency, look how the 18-week is holding this market back. You still have the lower highs, lower lows. They need a game plan. They need one bad in Europe. And Mr. Draghi's probably going to come up with something where he's going to flood the banks in some way with some more money so that they can get money moving through the economy. They had done it before. They'll probably do it again. In the British pound, you're back to 132.01. The upper Bollinger Band is 132.46, so you hit that. You also hit the 100-week average, and I think the pros took some money off the table there. Generally speaking, the first challenge of key upper moving averages or Bollinger Bands when they're with them is an area that the market pays attention to, so I think they stepped back. What is the trend? It is up. Momentum is up. Bias is up, but I think you've hit an important area. And each day that goes by, we're all wondering what's going to happen on Brexit, one way or the other. Is going to be a referendum? Is there going to be, I don't think there'll be a solution with the EU. They might be able to get an extension, but I seriously doubt they're going to get a renegotiation from them. In the Canadian dollar, notice how the market pulled back this week to the 18-week average. It has still got a pattern of higher lows and higher highs, but there is a but now. With the close this week at 75.21 under the 18-week average, I can start putting these arrows pointing down, and I will. So I'm going to call the market down unless you take out this week's high. The trend is down because lower highs, but, well, actually I'm saying this wrong. I've got lower highs and higher lows. I don't have a trend, so I want to clear that up for you. I can either take the arrows and point them both down and leave the ones pointing up. You need to take out 75.01 to confirm a downtrend. Bias is turned down. You've got a chart that's narrowing in. Lower highs, higher lows, right against the 18-week average looking for direction. Japanese yen still bearish. Lower highs, lower lows, big outside week down. Till you take out this week's high, the odds favor that the rally's back into resistance of the 18 and the 100 100-week average. Still going to be resistance zone. Could it reach all the way down to 87.11? I don't know. That's a monster move from here. Bitcoin gradually working its way, as we've been talking, back towards that 18-week average of closes. For the moment, I think a bottom has formed, but not an uptrend. Yeah, the swing line's up, but the bias is down. Even though momentum's up, you're under that 18-week average. You've got to get over that 4,060 level on a close to get traders, I think, taking notice. I think they're just going to say, okay, we got down to the 3,200 level, we rallied back towards 4,000, and that's about it. In the differential between Brent and WTI crude, we're suddenly seeing the differential come down from way up here. And that high, by the way, was a difference of 1066, and now we're at 927. So support, probably the 890s, the differential there. When we look at what's going on the Brent crude, you can see momentum is up. The trend is still up. The market got a nice rally last week, and this week it fell back to the 100-week average. Lower support comes in at 62.25. You'd really have to get under the 59.40s to break this chart pattern. So right now, a pullback in a market that's been friendly. WTI is a little different. It could not get up to that 100-week average. It still is in an uptrend. It's got the higher lows, higher highs, but it's got this reversal week, which means it could at any point pull back into the 53 range. In gasoline, up and away you go. And look at how this market has just soared into the upper Bollinger Band and the 100-week average. One of the things I've been telling my subscribers is, do you really want to be short gasoline going into the spring? And I think the market's already making its move. As for nat gas, it's a weather market. At this time of year, you're always playing the end of winter. The market is well supplied. You can see that with price. And yes, you're getting a bounce on the daily charts, but the bigger picture is still one of bearishness. It's going to need to wait and see what the summer's like. I just read an article before I'm finishing this up. This is the first time that Los Angeles, in the month of February, did not hit 70 degrees since records have been kept. I didn't realize that. So if you don't think there's some change going on, that's pretty interesting. In other words, it stayed under that. I just read it literally 5 minutes ago. You know, one of the things I like doing is, as you can tell if you're watching this, is teaching. But in the morning, I can do things, and I'm allowed to spread my wings because it's a subscriber video, not a general public video. And as such, I'm a registered broker. I could say buy here, sell there, and the reason is because you then get a user ID and a password to come in and see what I'm doing. But if I put it out to the general public, I can't do that. I can talk general trends, and that's what I'm allowed to do. I cover 40 markets. I've been doing this, by the way, as a registered broker since 1969 in the future. So I'm going to be in my 50th year. Feel great, having a ball doing it. If you take a look, I'm going to talk about chart action, what the pros are doing, technicals and fundamentals, my trade ideas. I'm even going to be on Bloomberg, by the way, this coming Monday, so about 9:50 in the morning. If you watch on Monday, I'll probably be there, and they'll be asking me whatever they do. You never know. You go in sort of blind, and they throw out the questions. Better have read well. But my subscriber video, it's about 15 minutes long. I cover 40 different markets, and what I charge for it, if you want to stay with it, give it a try. $7.95, that's 26 cents a day. What if you have an idea and you're looking for somebody to talk to and you just want that push? What if you don't want to talk to your broker because they're going to say yes to anything you want to do? Maybe you want somebody with a different opinion on the market. Maybe you want somebody to see the same thing you are or talk you out of it. Because we're not talking, because you're looking at the video and I'm throwing everything I got out there, it fits in. And about every 2 weeks I throw a live webinar where you can come in, and as a subscriber you can always write me and I'll answer your questions. Not a problem. I even talk to the people, believe it or not. So if you'd like to get it, give us a call. My staff will work with you. Otherwise, you can go on our website under the word education or research. You'll see a drop-down box. Go to morning subscriber video, click it on, away you go. I'm Ira Epstein. You have a great weekend. I'll see you all Monday.